Last week, I had two different conversations. One buyer who felt like the market was softening, and one seller who thought they missed the peak. And the thing is, they are both kind of right. So let me show you what's actually happening. Zooming out, single family home prices across Greater Phoenix are basically flat year over year. Not down, not up in any crazy way, just steady. And that's important because we've technically been in a buyer-leaning market since late 2024, and yet prices have barely moved. So right away, that tells you this market has a lot more stability than people think. Here's where it gets interesting. If we break it down by home size, which is honestly how most buyers shop anyway, you start to see the real story. Homes 1,200 to 1,800 square feet, prices are slightly down about 1%. 1,800 to 2,000 square feet, also down just about 1%. 2,000 to 2,200 square feet, they're actually up 1.4%. And 2,400 to 2,600 square feet, up close to 1%. 2,800 to 3,200 square feet, up about 2%. So what does that mean? The typical move up in family homes are holding strong or even gaining. The smaller entry-level homes are seeing a little bit more pressure. Quick example, just last week we had a buyer looking in that 2,500 square foot range, and even with more options, the good homes were still getting strong interest. Now, why aren't prices dropping? This part is key. You would think with rates moving around, prices would be all over the place. But here's what's actually happening. Buyer demand slowed in April because rates spiked, but new listings also slowed. So those two things basically canceled each other out. Less buyers, but also less competition from sellers. That's why prices just held steady. Now let's talk about the big factor, interest rates. In March, rates jumped from about 5.99% up to 6.64% almost overnight. That spooked a lot of buyers. But here's the part that people miss. They've already come back down to around 6.3% and they're trending lower. And if you look at the last few years, the average since 2022 is closer to 6.9%. So today's rates are actually on the lower side of what we've been dealing with. We're seeing this with clients too. People are watching rates closely, but they're not panicking like they used to. They're still out there looking. Now here's what we're seeing for buyers and sellers. For buyers right now, there's more patience. People aren't rushing into anything. When the right home shows up, they move. For sellers, this is where strategy has been mattering a lot more than ever. The homes that are selling quickly right now are the ones that were prepared and priced right before they hit the market, not after. Now let's talk about outlook. Here's what I'm watching over the next few months. If rates dip below about 6.25%, we'll likely see buyer demand pick back up. Inventory has basically stalled, so we're not seeing a flood of competition. Prices are likely to stay within this tight range unless something major shifts. And historically, housing reacts slower anyway. It usually takes about 3 to 6 months for big economic changes to actually show up in home prices. So short-term news doesn't always equal long-term impact. Now, if you've even been thinking about making a move this year, now is the time to start the conversation. Not because you need to act today, but because the people winning in this market are the ones who started planning early. If you want, I can show you exactly what's happening in your neighborhood and what that means for you. Just comment below.